which is basically giving home loans to people who really can't afford them.
But that kind of thing could never happen in Australia, right?
Banks have been portraying themselves over the past few months as very decent corporate citizens. They've been saying we don't make high-risk loans, we don't do no-doc loans or low-doc loans. We make sure that our customers have a deposit of at least 30%.
Indeed, earlier this year, in response to growing concerns about the booming property market, the major banks tightened up their lending criteria. But here's the thing, just because the bank won't lend some people money doesn't mean no one will. If you Google no deposit home loans, you'll find no shortage of options. Lenders like Pepper Group,
where the big lenders stop, we begin.
And Liberty Financial.
We made home ownership possible when the bank said it wasn't.
And Resolve Finance.
We're often able to help even when the others can't.
These are all non-bank lenders offering far looser terms than the big banks insist on.
No third-party lender's mortgage insurance approval required. All you need to be eligible is a 2% deposit.
The thing is, where do you reckon they're getting their money from?
Our financial strength comes from being funded by some of Australia's largest banks.
The banks have been sneaky about this. They are lending money to some far more risky players in the market that are called non-bank lenders, and they're not disclosing these loans, but they're called warehouse loans.
Look, nobody's saying this is all going to end badly, but what happens when this all ends badly?
The banks will probably be fairly well protected, but the thing is, if these things vanish altogether and a lot of their loans turn bad, the banks will then incur substantial losses. But this would need, of course, a financial disaster, like a property market plunge. So I think people have to know that there are these quite high risky lenders out there on lending the bank capital. So while the banks are pretending that they're very decent corporate citizens and they don't make high risk loans, they effectively do make high risk loans, but via these proxies, via these non-bank lending companies.
And who do you reckon will pay for all that?
In the event of a banking and property market disaster, the taxpayer will stand in to the tune of $380 billion to help prop up the banks. But this would need, of course, a financial disaster, like a property market plunge.